And hello traders, and welcome to another video. So in this video we are going to talk about what is the hybrid strategy. We made one PowerPoint presentation for you guys, and we're gonna briefly just go to and break down the things about hybrid strategy. Why is hybrid strategy good for you? What are the advantages of hybrid strategy? How did we make hybrid strategy, etc., etc. So we're not going to go specifically in every little detail about technical analysis, etc., etc. We are going to do that, but later on in this course. But today we're just gonna briefly go through the hybrid strategy and just talk about it, so you get to know a little bit the strategy that you are going to trade. So yeah, let's start. What is the hybrid strategy? Two strategies are combined into one: pure price action and smart money concepts. I think that everybody is well aware of smart money concepts. If you guys do not know what is pure price action is basically the way of how we are reading the chart. It's not a retail trading strategy, okay? So it's not retail way of trading and looking at the price action. Is looking at the price action in more details. So we are looking at the naked chart, guys, and again, as we're looking at the naked chart, we're reading the language of the market, and again, we can adapt to any sorts and any kinds of market in the future. Okay, so what are we doing? We are combining both strategies, okay, and we are eliminating the bad things, and we'll bring out the best of both worlds. So we have a lot of disadvantages trading smart money concepts, and later on in this video we're gonna go through them, talk about them. So basically we are eliminating those things and implementing only the good ones. So yeah, in combination with smart money and pure price action, we got hybrid, and it's just basically the best of both worlds. So why hybrid strategy is good for you? Everything is robotized and systematic. So I mean, I think this is the first thing that you need in your strategy. As you know, guys, we're all human beings, okay? So we are emotional. So that means when we trade, we are emotional, and when we want to make a decision, most of the times, this is why retail traders fail and they're not profitable. 95% of them are not profitable, they're losing money. It's because we make emotional decisions. And when you have a strategy, when you have a system, you want that system to be robotized as much as possible. So that decision-making process is eliminated out of your trading. So everything is robotized for you, and you're not gonna have a lot of emotions while you trade. Okay, so you're gonna see later on in this course how powerful the hybrid strategy is. So the most important thing for me is that we are not slaves to the charts. So again, guys, for each and one of you, I think that everybody started trading because one thing: you want financial freedom. I think that this is the goal of everybody who starts to trade, and that is financial freedom. But with financial freedom, I think that we also want a freedom of time. So I do not like, and I do not agree with, trading 5-6 hour long session every single day. For me, that is not freedom. I have a wife, I have 2 kids, they're small. I like to spend time with them. I like to focus on other things. I have hobbies also as well. I have a lot of things that I would like to do and that I need to do, and I just do not like to spend 5 to 6 hours every single day trading and sitting in front of my desk. It's not for me. Okay, I do not agree with that. If I started trading, first is financial freedom, of course, and the second is freedom of time. Okay, so when I trade 5-6 long sessions, it's basically like I have a job. Of course, you're your own boss, and you can decide when you're gonna trade, when you're gonna quit, are you gonna do it today, blah blah blah. So, but again, in order for you to make money, you need to sit in front of the screen and watch the charts, and I do not like that. Okay, so of course, also, if the strategy is made for trading sessions 5-6 hours long every single day, what happens with people who are attending university, who are going to school, who have jobs? you're gonna have a problem, so hybrid strategy is made also for people who have jobs, who attend the universities, go to school, etc., so they can trade, not miss any trades, etc., while they're working or going to school. So we have clear rules that we follow, and that is the really most important thing, one of the most important things, guys. So you're gonna have rules that you are going to follow for execution, for trade management. Everything is gonna be systematic. We have a strict plan that we follow, and that way we eliminate emotions when you trade. So of course, guys, you're gonna backtest the strategy, you're gonna do your ASR, you're gonna make your trade plan, and you're gonna follow that trade plan. Okay, so we read price action. That means we can identify if the trade is valid or not valid, and with that we do not make too many decisions by ourselves. Okay, so you're gonna see we do not pick zones, so for example, price is going in a downtrend, and all of a sudden you see change of character and price starts to go in uptrend. On the left you have a lot of zones, and there's a lot of zones that you can take your trades off, but we do not do that. Okay, so we have specific zones that we trade off, and we know what works for us, what not. So this is gonna mean that you're gonna know basically if the trade is valid or invalid to take. If the trade is not valid and it doesn't meet your setup, you're just ignoring it, you're skipping it, you're moving forward, you do not care about it. So again, it is going to eliminate decision-making process after your trade, after your trading, and it's really going to be better for you. So why hybrid strategy is good for you? We think in probabilities, guys. So again, this is the most important thing. I want you to understand this. Trading is the game of probabilities. Okay, guys? If you trade, there are a lot of traders who trade based on confluence. So they're looking at multiple time frames. Okay? And if you do that, and your entry execution is one time based on 1 minute, one time is based on 50-minute time frame, one 5-minute time frame, sorry guys, time frame, and then you're like making your decision based on, I don't know, 1 hour, 4-hour structure, 1 hour supply, 50 minutes break of structure, all of that things combined. There is a lot of confluence involved, and factor of luck is going to be more present. So what you want to do when you trade forex is you want a pattern that you can test, okay? And you want to test it, and you want to see what is the win rate of that pattern, what is the risk reward of that pattern. So you're gonna take the same pattern for 10 times. 10 times you're gonna take it, and you're gonna do the math. You're gonna see if I take this execution, if I take this pattern 10 times, let's say 6 out of those 10 times the trade is gonna go in my stop loss, and 4 times it's gonna be a winner. But because I have a big risk reward trade, when I win big, and I'm gonna compensate those 6 losses with my 4 trades that are going in profit, and plus I'm gonna be in profit. Because guys, at the end of the day, you need to understand that most high probability trade ever, you're gonna have all the confluences, it can still fail. Can still hit your stop loss. And the most shitty trade, aggressive trade, less high probability trade can go in profit. Why? Because again, everything is probabilities. And if you learn how to think on probabilities, in terms of probabilities, you're gonna be always better with it. Okay? So we have good risk management, guys. You're gonna see everything is already implemented in hybrid strategy, risk management, money management, trade management, even execution. Everything is already made and implemented in the hybrid strategy. So we have good trade management, retail trade management. Let's see what are the retail traders doing. So this is basically one of the reasons why 95% of retail traders fail. Okay, so they cut their profits short and let the losers run. Okay, so what happens, guys, is that when they win, they're fearful, and when they lose, they're hopeful. Okay, so let's say, for example, you're trading $200,000 account, and let's say you take 1% per trade. Right now, in 1% of those capital, you have $2,000. What happens if the trade starts going 5% in your favor? All of a sudden, you're seeing money on your MetaTrader and you're seeing $10,000. Okay, so for some of you guys, $10,000 is going to be a lot. For some of you guys, it's going to be normal. So for some of you guys, it's going to be nothing. But again, we can all agree $10,000 is pretty much, you know, in all of the world, good. You know, it's really good, $10,000. So what are people going to do when they see profits? They're going to be fearful. They're going to be scared. And they want immediately to get out of that trade. They want to bank profits. They want to log profits. They want to secure that. And what happens if the price is going in your favor, impulse is going in your favor, and then boom, all of a sudden price starts to pull back. And then let's say we have a healthy pullback, okay? After every impulse, we need to see a pullback. It's normal, okay? What happens when price starts to give us a pullback and you start losing 2%, and all of a sudden 2% is $4,000, and then you lost $4,000 and you were up $10,000 and you have 6 on MetaTrader, you're gonna be scared. You're gonna be scared. You're gonna look at MetaTrader, you're gonna be shaking, okay? You're gonna be fearful because you want to close that trade immediately and bank that profit. But this is how 95% of people lose money on the long run, because they're fearful when they're winning. So what you want to do instead is, when you win big and let your profits run. And when you lose, you cut your losses short. Okay? So what is the retail trader doing again when he's losing? Again, he's hopeful. What happens? Price starts to go in stop loss, and then all of a sudden you think it's gonna magically reverse. It's gonna magically save you right now. It's gonna go in profit. You're always hoping that that's gonna happen. Okay? So this is why you should think completely differently than the average retail trading. You're gonna see with hybrid strategy, we have really good risk reward trades. You know, when we win big, and when we lose, we reduce our risk. So out of 10 times, maybe 2 or 3 times you're gonna reduce risk. It's not gonna be full 1%. It's gonna be 0.5, 0.2, 0.4, etc., etc. But again, we're gonna talk about how you're gonna manage your positions and everything later on these videos. So they do not have a clear rules to follow. Again, retail traders are trading without first ever backtesting the strategy, okay? Without clear plan. They don't drill their trades. They do nothing, okay? So they think I can only trade and that's it, you know? But that's not how this business is functioning, okay? You cannot just trade. It doesn't work like that. You need a lot of things before you start trading. So they let the emotions play with them, guys. So in hybrid FX community, we talk about emotions a lot. We even have our performance coach, guys. So emotions are everything. You can do a lot of exercise. You can do everything. If you're emotional while you trade, everything falls. Okay? So they do not think on probabilities. Okay, guys? And of course, they gamble. They gamble. I mean, if you do not have a trade plan, you're gambling, really. Okay, if you do not journal your trades, you're gambling. Sorry, but it is what it is. You cannot tell me that, you know, you're not gambling if you're not journaling trades. So if you're not journaling a trade, how are you gonna spot your mistakes? How are you gonna improve on that? So basically, you're gambling. So hybrid trade management. We let our profits run and cut the losses short. You're gonna see, guys, later on the videos how we manage our trades and what we do. We have clear rules that we follow, so we do not trade blindly. You know, we know what works for us and what doesn't work. So everything is robotized and systematic, guys. Again, it's gonna help you tremendously with your decision-making process. We don't let emotions play with us. We think in probabilities, the most important thing. So, and we do not gamble. Okay, so we're going to talk about a little bit of disadvantage of smart money concepts and what we have done in hybrid so we can eliminate those disadvantages. Okay, so first off is trading and executing on lower time frames. Okay, so I do not say right now that that is bad. Okay, trading on lower time frames can bring you high risk reward trades, you know, but again, for beginner traders, I do not recommend you guys jumping on lower time frames. Okay, lower time frames can be messy, they can be dangerous. Okay, if you do not know what you're doing and you're trading on lower time frames, whoa, it's gonna be crazy. Okay, so if you're a beginner trader, guys, please, for a moment, before you gain some experience, stay away from lower time frames. Okay, so everything is fast, everything is happening fast. You do not have enough time to react. If you take a loss, you know, those emotions are going to be present. Maybe you're going to revenge trade. There are a lot of things that that, you know, are bad if you execute on lower time frames and you're not experienced trader. Okay, so if you have some experience, of course you can trade on lower time frames. They are good, but they're not for everybody. Higher time frames are safer. You have more time to forecast, more time to check your trade plan, checklist, more time to react, more time to think, more time to make a decision, more time to check your emotions, you know, etc., etc. And in lower time frames, everything is happening so fast, so things can get pretty messy. So again, smart money, I think it's discretional system of trading. And why I say that, again, guys, I do not say that trading on multiple time frames is a bad thing. Okay, you can do that, you can build more confidence. Okay, but what I do not like and why I find smart money discretional is because you're looking and executing on multiple time frames. Okay, so there are not going to be probabilities when you're doing that. So we're going to look at daily time frame, and daily time frame is going to tell you that structure is bearish. And then you're going to look at daily time frame, 4-hour time frame. There are going to be some demand, supplies, change of character, etc. It's going to be bullish. And then looking at 1-hour time frame, 1-hour time frame is going to be bearish again. And then you're jumping on 50 minutes, 50 minutes is going to be bullish. It's too much decisions. Okay, it's too much decisions. And again, guys, when we are trading, because we're humans, we're not robots, we are emotional. Okay, and our decisions are emotional. You do not know with how many people I have spoken, and they take the trade. They took a trade, and I break down that trade with them, and then all of a sudden they see all of the negative confluences. When I talk with them and we break down the same chart, price action together, they all of a sudden see all those negative confluences that they first didn't saw when they were taking the trade. Why? Because we're emotional, and you're going to see momentum, you're going to see nice trade, you're going to see the structure, you're going to see reactions of supply demands, blah, blah, blah. You're going to find your confluence, and when you're trading because you want to get involved and make money, you're going to look only at good things. And you're going to ignore the bad ones. This is how our minds are functioning. And this is why I think smart money can be discretional, okay? Because your decisions are all over the place. You know, there are a lot of decisions to be made. Oh, I'm going to go bullish or bearish. Where is my bias? In hybrid, we do not have a bias, okay? I do not like to have a bias. I do not like to predict. I want to react, and I want to read the price action. What price action tells me, I do that, okay? I don't have any decisions. What price action is telling me, I'm focusing on that and I'm doing that. Okay, so again, guys, I do not say again that this is bad, you know, trading and executing based on multiple time frames, but again, factor of luck is going to be more present. Okay, you're not going to be taking trades based on probabilities, you know, so your system is not going to be robotized and systematic. It's going to be discretional. So yeah. Analyzing and executing trades based on confluence and multiple time frames, and not trading based on probabilities. So this is why I talked, this is right now that what I talked about. So basically, yeah, if you're having multiple confluences and executing on multiple time frames, you're never going to be trading based on probabilities. Okay, so it's easier, it's a lot easier if you trade based on one time frame only. You focus on that, you can backtest the strategy, you can have your win rate, you have your statistics, you have your data, you have everything, and then you're trading on probabilities. You know, out of 10 times, when I take the same setup over and over again, I'm gonna be profitable longer. It's easier this way, you know, it's easier because again, we're emotional human beings, and it's better that we do not have a lot of decisions to be making by ourselves. It's better that strategy make that decisions for us. So again, guys, trading 5-6 hour long session every day, that this is totally not for me. Okay, I want to have freedom of time when I'm trading, and I do not want to sit in front of my PC for I don't know how many hours. So I'm gonna tell you a story. When I was younger, I think that I was about 12 or 13 years old at the time, and I was first introduced to poker. And my dream basically when I was a kid is to play poker, and I do play poker really good. I wanted to go professional before I started trading, but the thing is that I had a problem. So usually poker players are, and you're gonna find that poker is basically a lot similar to trading, you know, and they also think in probabilities, they also don't think long term, they also have emotions, but again, for them it's a little bit easier because they can exploit, you know, and they can influence the player that they're playing, you know, they can make him angry, the player can tilt, you can take advantage of it. So basically, you know, going against another person, and here you're going against yourself, you know, against the market. So it's a little bit different, but again, they have also labs and studies, you know, they review the trades, they review their hands, you know, after the game, you know, what they have done bad, what can be improved in that hand, what should they be doing better, etc., etc. So it's a lot similar to trading. There are a lot of professional poker players that are making money long term, you know, etc., etc. So it's a business, but I wanted to do it. It was my dream since I was a kid. Really, at a young age, I was introduced to poker, but I had one problem, and that is that they play 8 to 9 hours sessions every single day. And when I first sit on poker table, my focus is there for like 2 hours. Okay, and after the 2 hours, I'm in the game. I'm analyzing every hand, analyzing every opponent. I'm thinking everything. You know, I'm focused on playing. After 2 hours, boom, my focus is gone. You know, all of a sudden I start looking at my mobile phone, I start doing this, I start doing that, you know, I get distracted, and I figure out, because I'm like that, you know, I cannot sit in one place for long periods of time. I'm a little bit hyperactive, you know, I like to move, you know, and just sitting in front of the screen and looking and playing poker or trading, just not for me. And when I started trading, I was looking for something, and this is why I have invented the hybrid strategy. So again, you guys do not need to sit in front of the screens and, you know, trade 5-6 hours long sessions every day. I mean, it's not for me. And again, a lot of you guys have jobs, a lot of you guys attend the university, schools, etc. So you're not gonna miss trades this way. You know, you're not gonna be dependent. If I do not trade today, I'm not gonna make money, etc., etc. Okay, so yeah, high risk, high reward, guys. So smart money is good. You're gonna have really high reward trades, but also you're gonna have high risk. Okay, so for example, I don't know, you're gonna have 10 trades. Out of 10 trades, you're gonna lose 8 or 9, and then one trade is gonna go and finish in profits, massive profit. But the problem is, guys, when you're trading the bigger capital, believe me, you're gonna scare close that trade. It's not the same. If you're trading $500 capital, you can let your trade go for 30%. But if you're trading 400k capital, I bet that if trade goes 10% and you see 40k on your MetaTrader, you're gonna be scared of that money, and you're gonna scare close it. So it's not the same. Maybe smart money is good for smaller capital, you know, and flipping maybe accounts, etc., etc. But this is not professional trading. If you want to do this business professionally, you're gonna go and be prepared first. You know, you're gonna do everything that you have to do. Then you're gonna go for funding. After you pass the evaluation process, you're gonna get yourself a bigger capital, and you're gonna trade a bigger capital. Because with bigger capital, you do not need crazy percentages return every single month. I mean, just one account of 200k, if you make 5%, you're gonna have 10k. You know, so think differently. Do not think that I need to make 100% this month. Do not think like that. Think, how can I acquire the bigger capital so I can make smaller percentage return, but again make the same or more money. Okay, so this is why, again, smart money is a little bit hard for funding firms. Okay, so evaluation process is hard. Once you get to funding accounts, you know, to your real account, it's gonna be easier, but evaluation process can be a little bit tricky. You know what? Why? Because 1% risk is a lot for smart money. So, you know, because for example, FTMO, you have max 10%. If you lose 10%, you're out, they take your account. You know, so if you're trading challenge and you need to make 10% and you have only 10% to lose, you're gonna go with it probably 0.5 risk or 0.25 risk. You're gonna reduce a little bit of risk. But again, if you reduce the risk, you're gonna have to make more percentages in order to hit that 10% mark. So it's gonna be tricky, you know. Yes, you can get lucky in one trade, you can pass it, you know, and then you can reduce your risk later on when you're trading the funded account. But again, guys, you know, because of that high risk, high reward, smart money is basically more for some small amount of capital, not for big capital. I don't say that, again, there are no guys who are, you know, trading successfully, you know, smart money on fund. There are, but believe me, there are only small percentages of people who are trading smart money concepts successfully on bigger capital. Believe me, okay? Especially when the trade starts going like crazy, like 50-60% or something, and you're trading only 100k capital, you're gonna get scared because you never saw that much money. I mean, 50k, that's an average salary, yearly salary in, I mean, basically every country in the world. Basically, almost. Okay, so, you know, it can get a little bit tricky. So again, guys, too many trades. This is another thing that maybe you're gonna say that this is bad thing, you know, or this is a good thing, you know, but I think that this can be also disadvantage, because again, you're gonna have too many decisions every single day, and you're gonna have room for failure. You're gonna have more room for failure, and you're not gonna learn to master the patience and discipline. I mean, those are the two skills that you need if you want to trade on forex market successfully: patience and discipline. And if you have 10 trades per day every single day and you're looking at them, you're gonna get, you know, fear of missing out, and you want to get involved in them. And if you take one loss, second loss, third loss, and you start to ban trades and you have a lot of opportunities, boom, your account is gone, like this, you know. So this can be good, but at the same time it can get tricky, you know, and it can be bad as well, you know. So too much hype, guys, as well. Everybody's hyped about smart money. Everybody, you know, is tripping out, you know, thinking that, you know, they trade like a banks, you know, the hype that is right now, you know. You know, that hype is also not the greatest thing, you know, because you're gonna think that, you know, your ego is gonna go through the roof. You know, if you do this business, you guys need to be, you know, a little bit, you know, chill, relaxed, you know. And not, ego is a bad thing to have in the markets, especially if you make a wrong decision and you do not want to admit to yourself that you made a wrong decision. Oh, that can be really, really hard. So you always need to be honest with yourself, review your mistakes, and not have an ego in the market, you know. And, you know, there are a lot of traders who, you know, are like, you know, my stop loss is where is your entry, haha, you retail traders, I trade with the banks, etc. You know the drill, you know the hype that is going on with smart money. So this as well can be a bad thing. So yeah, So advantages of hybrid, guys, knowing what the price is doing. So again, guys, we're reading the pure price action, naked chart, language of the market. We understand the language of the market. So basically this is how markets are communicating with us. So understanding the language of markets. We have also high risk reward trades. So you're gonna have trades that are gonna single pass like this, your FTMO account. So we're going to have freedom when trading with hybrid because we look at the price action. So this is the number one thing that I'm looking at. Basically, for all of you guys, I really think that it is the same. So if you started trading, first, it's financial freedom. Second, it's freedom of time. So I think that this is better, not be glued to your screen, 5-6 hours every single day. So we will have a lower risk when trading with hybrid because we know exactly what we're looking for. This is because we have clear rules and strict plan that we follow. So our trades are much safer and have high risk reward when we use the hybrid strategy. So we do not need to trade 6-hour sessions to get good trades, guys. Again, you're gonna have a lot of opportunities. So we follow higher time frames and react to them in a way we know it works for us. Okay, so we try to robotize the strategy as much as possible. So we are going to make less decisions by ourselves. The most important thing ever, if you want to be successful at trading and if you want to make your life easier when you trade, is basically you need a system that is not based on you making too many decisions for yourself. It's better to let strategy do its thing, do that for you. So hybrid and funding, many strategies are profitable, but not every strategy is designed for prop trade firms, guys. Really, there are a lot of communities out there that have profitable systems, that have good systems, but you need to understand that they're just not designed for funding. Okay, so they're designed for real capital, and trading on a funded account. First, you have a valuation process, challenge and verification. They set your profit targets, they have set you time limits. Then even when you become their trader, when you have funding capital, even then you're fixed on minus 10%. I mean, that's FTMO. I'm speaking about FTMO because I trade with FTMO. I'm thinking my forex funds is like minus 12% or something, max loss. But again, you're capped on that, so you do not have 100% of your capital. If you have your own capital, you have just fixed amount to like 10%. So this is why a lot of strategies that are profitable on real capital will fail when traded on funding capital. So smart money concepts bring you a big risk reward, and you can pass the challenge in one trade. That happens all the time. I see that happening all the time, guys. So even communities who have a large amount of members, for example, let's say if they have like 10,000 members, out of that 10,000 members, they're trading every single day. Their members are trading every single day. And you think how many of them will pass the challenge because of luck, because they hit one lucky trade and boom, trade goes because they have high risk reward. They're trading on lower time frames and boom, one trade goes in profit. They they pass the challenge and boom, they post it on story. And this is like how it goes, But again, factor is luck is present there, guys. So, but with smart money, you have a lot of losing trades, and the prop firms do not allow big drawdowns, guys. So it's gonna be a problem. Okay. Yes, when you have a funding challenge, when you pass the valuation process, and when you have a real capital, you can reduce your risk. It's going to be easier a little bit because you don't have time limit and you don't have a profit target. So that pressure is not going to be there anymore. So it's going to be a little bit easier. But again, it's still, high risk, high reward trading. Hybrid has a much higher success rate. Hybrid was created to maintain consistency on funded accounts. So periods of the market with hybrid, you will learn to read price action. We can recognize the current phase of the market and take advantage of that, because guys, you need to understand there are a lot of traders, again, who do not understand these concepts. So they have a trading plan and they trade all the kinds of markets with that same exact trade plan. But you need to understand that there are periods in the market. There are corrective phases in the market. There are trending phases in the market. Okay, so when there is a corrective phase, you do not want to be aggressive. You want to be passive. You want to play defensive. You want to protect your capital. And when there is a trending phase, there are opportunities everywhere, there are momentum everywhere, there are good trades everywhere. You want to be a little bit more aggressive and take advantage of that. Retail traders do not understand this, okay? So they have one trade plan and they trade all the markets the same. Everything is the same, everything is the same for them. So there is a corrective phase and they're still gonna trade. And this is the months when they're gonna lose minus 10%. And then the trending phase is gonna come. Let's say, for example, I mean, I'm recording right now this in December. December is usually a corrective month, you know, nothing really interesting is happening. And usually in January, we see a lot of opportunities. Everybody makes a lot of percentages, etc., etc. So it's usually like that, okay? And the trader who is trading in December, let's say, for example, a retail trader who doesn't understand this, is gonna make 10%, minus 10% this month in December. And then the January will come and he will make 10%. But at the end, he's gonna be on break even. And what you're going to do is you're gonna look at it, you're gonna understand the price action, what price action is telling you. You're gonna see that market is corrective. There's a corrective phase in the market. You're gonna adjust your trading accordingly. So all of a sudden, you're gonna think about protecting your capital, not risk it. And you're gonna get maybe minus 2, minus 3% minus. And then when January comes, you're gonna take advantage of that and you're gonna make 10%. And your overall profit is gonna be 7%. You lost 3 here, you make 10 here, you're gonna be up 7%. And the average trader who doesn't understand this concept is gonna be a break even. And this is how he's gonna always go in a circle. He's never gonna know what is wrong with me, why I don't have results, etc., etc., because he doesn't understand this concept. Okay, guys. So we know when to be more aggressive and when to be patient during trading. The market changes with time, but hybrid always adapts to the market. This is the beauty of hybrid strategy, guys. So once you learn to read the price action, you are never going to be left behind. So as you guys know, market is consistently changing. So certain concepts that work now, they doesn't mean that they're gonna work in 5 years future. But when you learn to read price action, the naked chart, you're always going to be able to build on that. So if something happens, you're gonna be, again, you're gonna look at that, you're gonna spot that, and you're gonna adjust your trading accordingly. Okay, so you're gonna adapt, always you're gonna adapt with hybrid strategy, any kinds of the markets. And that's pretty much it for this video, guys. Hope you enjoyed it, hope you liked it. If you have any questions, just shoot me a DM in Discord. And yeah, hope you learned something new, hope you liked the video. And yeah, that's it for this one. See you in the next one.